At Capella University, you'll get support from people who care about your success. From before you enroll to after you graduate, pursue your goals knowing help is available when you need it. Imagine your future differently at capella.edu.
You're listening to a Mint podcast brought to you by HT Smartcast.
Hello everyone and welcome back to Why Not Money. I'm your host Sashind. Today I have invited Vivek Banka, co-founder of Groww, to talk about the growth of fintech RIA firms and why, for most people, these apps might be more suitable than pure transaction platforms like Groww, PayTm Money or PhonePe.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
Hi Vivek, thanks to coming to our show yet again.
Thank you, Sashind. Thanks a lot.
So Vivek, I was talking to my sister last night and she has no connection whatsoever to the financial markets, right? But she knew all these apps very well. Groww, PayTm Money, Zerodha, PhonePe. So she was trying to explore where to invest their money. There is one data by Economic Times that said in November last year, half the total industry SIPs came from only this fintechs. So, fintechs like this are growing in so much popularity, but are there something that people should be aware of?
Yeah, Sashind, thanks. I think very important question and something which also speaks a lot about the times that we live in today. Digitization is fast changing the way we do every single thing, including investing as well. And for obvious reasons, post the COVID fiasco that happened, everything has become digital first. And currently the millennials, especially who are in the markets right now, they have chosen the digital route to start their first investments. And sitting in the comfort of their homes, I think platforms like Groww, PayTm have provided a good platform for these guys to invest their money. And having said that, there is one big negative to these things. The positive, of course, is that they get an opportunity to invest with the confines of their homes. But the negative is that a lot of these platforms are dependent on traffic, more number of people, more number of users, more volumes to succeed, and their revenue also. So what happens is these investment platforms are very susceptible to selling the latest fads. So today, as you can see, supposedly the SIP book, which is there in the country of 18 to 20,000 crores, 50% of them are from small and mid-cap funds. So you can understand that people are jumping onto this bandwagon of small and mid-cap, seeing the performance of the last 12, 15 months, where funds have given 50, 70, 80% returns. Now, this is something which is extremely worrying because these platforms are largely execution only. And the user has to do it yourself kind of a investment program. And they do not necessarily get the best advice or any advice whatsoever. All the advice that they get are bits and pieces from friends, family, from Googling, etc. So that's the biggest red flag I see with execution platforms like Groww or PayTm Money.
So Vivek, can you extend a little bit on this? Can you run us through, how a normal person behaves while using such platforms? Like you mentioned that these are execution only platforms, which means there is no advice. You have to go and choose a mutual fund of your choice. But what are the behavioral, pitfalls that people are having? So, and which people are making mistake on. So if you can just, explain from, let's say, from a very visual perspective. So if someone opens the phone, what do they see? How do they think while trying to invest their money for the first time, who doesn't have knowledge about financial markets? So can you please delve a little deeper on the behavioral aspect of any person using this app?
Yeah, sure. I think, again, very interesting insight that you gave. So when a person comes in, and this is not something which is only limited to domestic investors, this is a global human psychology which is there, where they are tuned to buying the best performing funds over the last 6, 12, 15 months, presuming this will continue forever. So when they enter into these apps, some of these apps could show the best performing funds of the last 1 year. And needless to say, with all the hype around the fact that India's economy is doing very good and small caps will do very well, the temptation to click on that button which says that, XYZ small cap fund has delivered 60% returns over the last 12 months, and then going ahead and buying this is very, very common. And honestly, the entire ecosystem, which is the media, social media, the websites, platforms that you're talking about, they play on an individual's mind. And the fact of the matter is that with a few clicks, your investment is done. And you do not get time to think or digest data of different kinds to take an informed decision.
So Vivek, for our listeners, you just mentioned that they a lot of people who are new to the market, they come on this app and they have a tendency, as as humans, we have the tendency of looking at past returns, which funds have delivered the highest return, and there is an inherent bias to invest in those funds, especially because these apps also showcase these funds in the front page and keep it very visible. But Vivek, for our listeners who might not be from the financial industry, can you please talk about the problem in this, why investing in the last year's best performing funds might not be a really good idea?
So Sashind, I think one big investment philosophy or rule that is there, which has been seen across different global markets and even across centuries, is essentially the fact that reversion to mean. Reversion to mean is the concept which says that the best asset classes of today will not necessarily be the best asset classes of tomorrow. And investment asset classes typically revert to their mean. And which is why investing in something like this, which is the latest fad, could lead to a large extended period of low or possibly negative returns also. To give an example, in 2017, we saw one of the best bull markets in small cap funds, where the small cap funds again had gone up 35-40%, possibly even more period. And again, the same thing happened. People jumped onto that bandwagon of small caps, both in terms of stocks and funds. And then 2018, it saw a big crash, and it took 5 years for these funds to actually deliver returns. And all these guys were actually seeing the large caps and the quality stocks do well. And again, the same thing happened in quality stocks. So 2018 to 2021 odd, quality stocks, which is basically value at any price, did extremely well. So once everyone started hopping onto that, which is basically your coffee can investing or whatever you might call it, the Nestle's of the world, etc. So they started buying those kind of stocks, those kind of funds. Again, that's something which has done extremely poorly over the last 2 years, because these are cycles. And it is my own personal belief also that the winners of today are most likely not the winners of tomorrow, especially from an asset class perspective. And hence, the decision making, which is catalyzed by past returns, is one of the worst ways to invest.
Got it, Vivek. I think you kept it very well when you said the asset classes tend to mean revert, right? So, the best performing funds of last year might not, go on to become the best performers in the coming year. And in fact, there is I think a low probability that they will remain best performing funds because they have kind of reached their peak, right? So everything happens on a cycle, and when you invest at the top of the cycle, you are not in a very good position. But Vivek, also another important point that many people have pointed out in the industry, that it's very difficult even for the big players like Groww, PayTm Money, Zerodha, to make any money by selling direct mutual fund plans. So how does their business model work? And if you have some insight on how they try to earn money from selling mutual funds, that I think that would provide useful insights for our listeners.
There are multiple ways that these platforms make money. As you're aware that most fintechs have, or most online platforms, they typically are in the pursuit of getting more and more users. In the end goal that they will be able to capitalize on these investors by cross-selling or upselling some of the things. Now, these platforms also offer a boutique of services, and fortunately or unfortunately is what I would feel, that a lot of these users who might come in through a mutual fund route initially might end up doing things like future in options or direct equity or day trading, etc., through these platforms. And that is something which is extremely, extremely dangerous. Even if someone was to get caught in the wrong side of an asset class, is still better, because sooner or later, asset classes do come back and make up for the losses or the opportunity cost of a few years of underperformance. But if you get caught in things like future in options or day trading or penny stocks, you could lose capital permanently and you will never get to see your money back. And this is something that we have been seeing very often. In 2022, we saw not these platforms, but a host of other platforms sell crypto, and we saw what happened in crypto, where people lost, billions of money across the world. And apart from this, of course, there is this new entity or process being launched by SEBI, which is called execution-only platforms, where they will be allowed to charge 2 rupees per transaction. So once again, you need to understand that, as they say, if the product is free, it is, your data is what the entity is vying for, and which allows them to cross-sell a lot of other things, and especially things like F&O and direct equity. Trading is something which one should avoid completely, unless they have seen 2 or 3 market cycles. At least 2 market cycles. 2 market cycles means approximately 10 to 15 years in today's times.
Got it. So just to simplify what Vivek just said, these apps like Groww, PayTm Money, all the leading fintech apps, they sell direct mutual fund, which do not fetch them any commission. So whatever amount or number of users they have, it's very difficult for them to make money from that. So the end goal for them is to, try and upsell other products, like it can be F&O, direct stocks, and a cost of other products, which can make a revenue for them. So that is simply it. And, although there is a way by SEBI to now earn money by providing this transaction services, it's not a lot of money, right? 2 rupees per transaction is still very difficult in today's time. So that is there. But Vivek, now let's come to the interesting part, right? So there is a host of other types of fintechs, including your own platform, which is Gold Teller, and host of other platforms. But Vivek, can you introduce your platform to our listeners and tell us what it really does and how it solves this problem of that big fintech apps has not been able to cater to?
Sure. Thank you. I think thanks for allowing to speak on this. So platforms like Gold Teller, or there are similar ones like One Finance and possibly a few more, which actually provide holistic investment advisory services under the Registered Investment Advisory Regulations by SEBI. Our platforms generally are much, much more boring, and which is why investors do not flock to our platforms the way they flock to platforms that cater to more emotional selling of the latest fads. In our platforms like us, we help the investor take an informed decision basis multiple factors, which is their financial goals, their income levels, their expenses, their life expectancy, uh, their plans for their kids, their psychological reactions to, risk and many other things. And post that, we give them advice on what they should be doing.
So let's look at it this way, right? So if you go to all the big fintech apps, you will go there, log in, put in your Aadhaar card ID, PAN card ID, and once your account gets activated, you will see a host of best performing funds, and there is a tendency for people to look at those and invest in those hot sectors or hot themes. So that the pitfalls of or the disadvantages of that we have talked about. But why do you say your platform like Gold Teller is a boring platform? Once a person makes the account there, what does he or she see in the platform, and do they have to pay any money? So can you run through the behavioral aspect of
So
getting in?
I think successful investing is boring, and most investment pundits globally who have been the most successful will surely tell you that. And we at Gold Teller also believe that successful financial planning and wealth creation is a boring activity. So what happens is when a user comes in, we take a lot of data points from the user about his income, expenses, financial goals, etc. Post which we give him a score based on 3 different verticals. One is investments. How are his investments performing? How are the costs on his investments? Second is how is his lifestyle right now in terms of cost, income to savings ratios, whether the financial goals are achievable or not, or whether any financial goals are pretty lofty and unachievable. And thirdly, in terms of taxes and succession planning, whether the guy has invested into investments that are fairly tax efficient or not. Post this, what we do is we draw up a lifeline or goal line, as we call it, where all the financial goals of the user is plotted on a chart where he can see whether it's achievable, not achievable. He can play around with numbers like his income growth, inflation, etc., and check whether that changes anything. And finally, we give him a report. And goal planning is an activity, or investment planning or financial planning is not a one-time activity. It is something which one needs to spend at least a few hours a month and do an exhaustive review once a quarter, if not earlier, because things change, financial markets change, people also, their thought processes about life, about their financial goals, everything changes. So it's important to keep doing this activity, this monotonous activity, very regularly. In the US, a study said that financial planning is the second or third most boring activity that people find. And this is after going to the dentist and one more thing. So you can understand how scared people are with financial planning, and they do not realize that bad financial planning can lead to disastrous circumstances eventually. And I am very sure over the next 12, 24 months or 36 months, when this tide recedes, we will find a lot of people suffer from this. And which is where platforms like Gold Teller, we do not despise platforms like PayTm Money or Groww or any of these. They are also doing a great job. But individuals need to understand that they are an execution platform and they are not an advisory platform. So they have to go to them for ease of execution on stocks, etc., while they come to platforms like Gold Teller for advice. And of course, some of the platforms like Gold Teller, we also provide execution facilities at very low cost. So the benefit of a registered investment advisor and a platform is that SEBI does not allow this category of people or us to make money from the investor apart from what they are paying us. So that makes it very, very transparent.
I got the point that, we can enter our goal, our, financial situation how many people are there in the family, and accordingly, goal teller will tailor one advice for us. Accordingly, which we can, deploy our investments and money. But the missing angle is, Vivek, who is it actually that is giving the financial plan? Is it AI generated system, or is it someone working on the back end? Is it a real human? Is it an AI or is it a human? And the other part is, how much do you charge? Is it an annual fee, quarterly fee? And if yes, then, how much amount you charge?
Thank you again for asking this question. In terms of what we charge right now is a fixed cost of 2,500 for 6 months. And there is no other cost to the user at all. Zero. Even if he invests into mutual funds through Gold Teller, it comes at zero cost or commissions. If he invests in bonds, typically the bonds that we provide suggestions on have a better pricing to them than they will get on any of the online bond platforms, and so on and so forth. From an insurance perspective, we are tied up with Digio, which is one of the best platforms today on the insurance advisory side, to give them insurance advice. And finally, SEBI does not allow us to charge for more than 6 months in advance. The best part about this kind of arrangement with the user is that the user pays us only when he's satisfied. And typically how our cost structures work is in the first 6 months, we typically lose money. Only on the renewal of the users, we make money. And if we do not keep the users happy, it is very tough for us to make money. Coming to your next or your first point about whether the advice is given by AI or a human thing. So there are 3 steps in this. The first step is identification of problems of the user. This is something which is AI driven, where once the data is collected of the user, the system identifies the problem areas, the problematic investments, the problematic goals, any nominations, etc. that are not done, and then communicates this both to the user and, of course, to our backend team also. Once this happens, the next step comes into play, which is essentially getting the user solutions to tide over these problems. Again, the first bunch of suggestions are again AI driven, where the AI helps them understand which funds should be bought considering their risk profile, their financial goals, any goals which are not achievable, whether to defer that goal by a few years or whether to completely eradicate that. So this is the second step where the AI suggests solutions to the user. The third step is where the user might have specific unique situations which cannot as yet be solved by AI, which is where our hybrid model comes in. A relationship manager takes them or understands their position and gives them a tailor-made or a personal solution.
So Vivek, let's say I have a specific query. So is there a real human that I can call up and talk to your platform?
Yes, absolutely. We have a silver tier and a gold tier, and of course a third diamond tier, which is more for large family offices. But on the silver tier, you get a bunch of free calls with a relationship manager initially, and then one free call every month as well with a human being. And in our gold tier, there are unlimited calls that can be done. And another thing which I would like to put forth here, Sashind, is that in 90% or more of the cases, investors on our platform would have saved more than what they have paid us by a factor of at least 3 or 4 times. This saving is largely by better low-cost investments on the mutual fund side, or it is through better pricing on the bonds, better pricing on PMSs. And of course, this is all tangible benefits. The intangible benefits are about the fact that they get better quality advice.
So Vivek, since we're running out of time, I have a lot of questions, but my last question is, let's say someone wants to invest 20,000 per month, which is not a very huge amount, right? And if the person pays, 3,000 or 4,000 for 6 months, then the advisory part will form a very big chunk of the total corpus he has. So for someone who doesn't have a very big corpus to invest in the first place, should they, even consider a platform like yours, which charges a reasonably high amount?
Sashind, this is a question which we get asked a lot of times. But what we believe is that, yes, if someone is saving only 20,000 or 25,000 for the entire year, then possibly this amount is not worthwhile for them. But if it is anything north of 2 or 3 lakhs a year, I think it makes a lot of sense, because we help build the foundation blocks of financial planning for the user, where they get habituated to taking very informed decisions. And the idea is to make each person on the street well informed and habituated to making such decisions. And once they are with us for at least 1 or 2 years, honestly, they can become independent of us also, because emotionally they become wired to taking decisions in a certain way.
Makes sense. And if there is someone who is investing, 20,000 a year, which is not a big amount, but hopefully their income will grow and very soon they would want to invest more in the future, and probably
Sashind, there also we've got a distribution platform as well, where that also is in the direct core as of now, where if someone wants to save 15,000-20,000 rupees, he can come and choose which goal he wants to use this money for, whether it is for a certain short-term goal, a medium-term goal, or a long-term goal, and then invest the money accordingly. Now, one more thing which I missed out is to earmark the right investment for the right goal, which a lot of people do not do, and very critical element of financial planning. So any goal less than 3 years of residual maturity cannot be invested into equities as a principle. Secondly, whenever a goal comes closer to completion, what we advise is anywhere between 12 months to 36 months of that goal, we unwind the equity exposure on a staggered basis. Because in COVID, we saw people who did not unwind those equity positions during March of 2020. A lot of them had to plan for their kids' education and unfortunately had to sell a lot of their investments in distress. So we do not want this to happen, which is why a financial planner is needed not only at the start, but throughout your investment journey.
Got it. So Vivek, it was lovely talking to you. Before we let you go, can you give our listeners a book or a movie recommendation, which can maybe help them start or begin their investment journey?
Yes, I think one book which I love in terms of equity markets is One Up on Wall Street by Peter Lynch. And that's something which has helped me a lot in my own journey. I think I read that book almost 2 decades back or so. And in terms of movie, I think I personally love The Big Short. And that is something, again, which tells you how reversion to mean happens and how to stay away from the latest fad.
Yes, I think these are fantastic recommendations. And thanks once again, Vivek, for coming to this episode, and hope to see you again in future episodes.
Thank you. Thank you so much. It was a pleasure talking to you, as always.
That brings us to the end of today's episode. If you would like to know more about this topic, then you can reach out to me on Twitter. I go by the username @Sashind NJ, or LinkedIn using my full name, that is Sashind Ningthoukhongjam. We would be happy to take your suggestions. That's all from our side. Thanks for tuning in. See you in the next episode.
To stay updated on this podcast, follow us at HT Smartcast on all the major social media platforms. To listen to more such podcasts, log on to www.htsmartcast.com.
At Capella University, you'll get support from people who care about your success. From before you enroll to after you graduate, pursue your goals knowing help is available when you need it. Imagine your future differently at capella.edu.